As we've said before, this is a very complex discussion, but very timely. It's trade talks that are seeking not just to rebalance trade between the two largest economies in the world, the US and China, but also has very ambitious aspirations of trying to address intellectual property rights as well as foreign company access into the China market. I have to admit, at this point in time, the discussions appear slightly ahead of what I would have expected. I thought this was going to be a multi-stage discussion. First phase would be balance of trade, second phase would be intellectual property, and then perhaps a third phase addressing market access. But on March 15th, the China government passed a new law, the foreign investment law, that promises no more mandatory transfer of intellectual property to do business in China, and also promises to treat domestic companies and foreign companies equally. Again, details are in the implementation, still very early phases, but it's encouraging. I'm also encouraged by the cordial tone between the two governments as they discuss this, and I do think it's very important, not just for US, China, but also we've seen signs of weaker data from some of the open economies in Asia and Europe. So this will be beneficial, a resolution of this trade discussion for US, China, multinationals, as well as Asian and European economies. What the Federal Reserve does is very important for emerging market economies. So over the last almost 2 years, as the Fed hiked rates, the US dollar did strengthen, especially against emerging market currencies. What this means is most imports became more expensive for EM economies, causing inflationary pressures in quite a number of these economies. So central banks there had to hike rates, which does increase the cost of capital for companies that are doing business there. A stronger US dollar also means that capital or investors tend to come back into the US market, which means there's less availability of funding for emerging market economies and companies. Recently, actually starting in 2019, the Federal Reserve has become a lot more dovish, which means that they're no longer as concerned about inflation. They're not as concerned about an overheating economy. They've actually been talking a lot about some of the macro risks that are happening around the world, and also a little cautious about US growth in the second half. So what they've done is they've actually stopped hiking. It sounds like for the rest of the year. They've also stopped their quantitative tightening policy. So as a result, the US dollar has pulled back slightly against emerging market currencies, and we've seen bond yields come down quite significantly across the world. So this is positive for emerging market countries in that stronger US dollar is now no longer a headwind. It also provides central banks there a lot more policy flexibility. So for example, the Reserve Bank of India recently took this opportunity to cut rates, which will help the economy in India. There's still a number of macro uncertainties in the world today. Some are political, like Brexit. Some are more economic, like what's happening in the slowdown in China, in some of the Asian economies, and in Europe. Having said that, we're still cautiously optimistic on emerging markets with a longer-term perspective. So in the Emerging Market Balance Fund, we are slightly overweight EM equities versus EM fixed income, and basically it's based on valuation. Our view is that equities have pulled back quite significantly in Q4 of last year, and so it represents a attractive risk reward. Within the Granite Managed Solutions, we actually slightly increased our already overweight position to emerging markets in Q4 of 2018, and that was again a valuation call, that those EM equities actually did pull back quite significantly. So our view is with a more range-bound, potentially softer US dollar, with bond yields coming down around the world, those were significant headwinds for emerging markets that are no longer in play, so that's positive. We also think that if there is a resolution of the US-China trade discussion, that would be positive for emerging market economies as well.